have officially kicked off. Right. So today we're going to be starting off as usual do with our euro dollar. Right. So euro dollar has had quite a bit of an interesting run in the past couple of weeks, probably 2 or so weeks, and we've seen some movement. Okay, let's go down to the daily chart. Okay, we've seen some movement that has been contrary to our overall trend directional bias. Right, our trend directional bias predominantly has been down. Okay, we've seen a lot of aggressive movement since the beginning of the month, October, and the rise has peaked at around 150. Right, so 1050 rather, so 1050 even. That is basically where we have seen the market rise up to. So what we need to do, right, so what we've been looking at predominantly there, as I said, there are short opportunities, right? So now we're looking at some very key levels where we'd likely see a reversal, right? Because right now, where the market is, I mean, there is a potential for a reversal and a continuation of the move to the downside, but there aren't any significant levels where we'd like to see a rejection, right? However, if we do go up to 110 even, right? So 110 even seems like a really decent one. However, the only thing that I don't see there is any significant previous support structure. So if we go back to this swing low over here, this looks like a better shorting opportunity. Okay, so this previous support structure looks like something solid, right? It does look like we'd have somewhat of a rejection at that particular price point. So just above 1100, right? I'd like to see the market peak above there, even an extension to the upper levels of 1150 even. That would mean even more. Okay, let's just highlight that area over there. Okay, so 1150, so that 50, let's say 40 pip range between 111 rather, and 1150. So that range very significant. As you can see, you have a 200 daily moving average right above the actual price action at this present moment. And if we take our fib from this swing low point through, rather from the swing high, okay, so from this swing high, $14 to $0.09, then we have a 50% Fibonacci retracement right at 1150. So obviously we'd like to see a continuation, a push to the upside before we can confidently say, all right, there is a potential for that reversal coming in at that particular area over there. Okay, so that would ideally be where we'd like to see. Okay. For the next week or so, or the next, probably about a week or two, we can see that the market had this previous swing high, right? So this was 2 weeks high ago, okay? That makes any sense. And we had this swing high, which sort of like broke that previous week's high. Okay, that pullback we actually usually get, right? We spoke about this on the GBP CAD, I think. On the GBP CAD, we had something similar where the market spiked just above the swing high, pulled back a bit, and then just popped up onto the upside, right? So that usually happens when the market is sort of like ready to take off in one particular direction. So I think around 110 would be a really decent buying area there. We'd have to have some sort of a rejection candle, right? Some sort of a rejection candle coming in to this week's high and this swing high area. But there's a big figure as well. Few more things would have to come in to play in order for us to feel like that this is a really good trading opportunity. Any one of the oscillators and EMAs perhaps on the lower time frame would solidify our high probability trade setup up until that blue area just above 1150. Okay, so that's the area. Those are the two areas to watch during the course of the week. Obviously, if the market doesn't play out to this expectation, right, we're not going to mess anything. We're just staying out, like keeping our distance, right? So GBP USD has been probably one of the most active markets from last week. really. Yeah, it has been very aggressive, a lot of volatility, especially in the pound. Not so much in the dollar, but more in the pound. We've had a lot of volatility. So if you check all the other GDP crosses as well, the GDP CAD, GDP JPY, there was a lot of movement. Now we can see that on the daily time frame, we've had these two aggressive candles, right, that moved to the upside. So the swing low was at 2200, okay, and the swing high was at 2700, okay, so this is like 500 pips in total. So if we just measure from here to here, boom, that is a full 500 pip swing, okay, in 2 days, which is quite a lot. Now, our bias formed has been short on the GBP USD, okay. The only thing that we've seen is this swing lower 2050, right? So this 2050 level, okay, so this 2000 rather, okay, I think our main, okay, 20, yeah. So this 120, that's where we initially saw some resistance, all right? So that was what made us a bit reluctant in shorting the market around these areas at these lows over here. But we had the solid low from 2017 and the solid low from 2016 as well. And the market just tagged that low and just started moving upwards. We did get a nice rejection from this swing low over here, okay? Although that didn't last, I think we had a push that lasted about 300 pips, close to 300 pips, 297 to be exact, okay? And the market just pushed back up right above that swing high again, okay? Now, at this present point in time, we can see that the market has broken above the swing high over here, this daily level, okay? Last month's high, the market has broken above it with an aggressive candle on the upside, okay? We haven't got like a retest of that swing high just as yet. But what we want to see is a retest in the market moving away from that swing high point, okay, and then continuing on the move to the upside. Right? So until we get that, the GBP USD is more of a no play for me. Okay? So if we do get the swing high here, market breaks above, rejects there, then certainly looking to take that one going low. Right. I am still predominantly, if you look on my higher time frames, I am still predominantly short on the GBP USD. But like I said in the group, okay, if you're not a fan of volatility, just stay away from the pound for the next month at least, okay? Because obviously we're looking at some major developments in terms of the Brexit deal for the next couple of days, okay, couple of weeks ago. Okay, one of my favorite markets, GBP, JPY. Okay, now the pound yen also has been in somewhat of a decline, and until probably 2 or 3 days ago, we've had this very aggressive push to the upside from 131 even. Okay, so from this swing low 131 even to 138 even. Now, when something like this happens, right? So when you get some sort of an aggressive push like this, the market is, like I usually say, if the market were a person and it jumps out the window, right, of a 3-story or 4-story building, it's probably going to sit there for some time just to, internalize the pain, like just feel the pain, and then stand up probably after an hour or maybe a day or two. So most likely what would happen is we get some sort of consolidation or ranging type movement from the market after an aggressive breakup like we've had on a lot of the GDP pairs. Right? So we did get this pin on this 3550 level, right, which is this previous week's high. So one of these other weeks, I think it's the week of 13th September, and the market just came in, sort of like rejected at this price point over here, which did look promising. I am intrigued about that one. Not entirely convinced because I didn't see anything else in that regard. Okay, so I didn't see anything that would say, okay, that really just stands out, because obviously we're probably going to get a bit of sideways consolidation. The market might range ahead, and therefore it's going to make it very difficult to make some money on a breakout if the markets are still going to be very choppy. Okay, so we'd like to see though a pullback, right? Probably another swing at 35.50, right? Swing at 35.50, and then a push continuation move to the upside. Okay. Now, I think we've been looking at the USDJPY range for quite some time. Okay, and one of the key things that we've been looking at is we're not quite certain where it's going to break out. Okay, so we've had two biases about it, saying, all right, we've had this sort of like triangle, and if the market breaks down to the downside, we're going to be looking at short-term opportunities, and if it breaks to the upside, we're going to be looking at buying opportunities. Okay, so on the upside, we're looking at a break above 108.50, and on the downside, we're looking at a break below 106.50. Right? So we haven't really gotten anything to latch onto at the moment on the USDJPY. As you guys know, I've been certainly very neutral on it. Okay? And aside from these swing highs over here, this really doesn't convince me that the market has broken to the upside, and therefore we should expect a continuation of this short-term trend. Okay, because even on the larger time frames, it's pretty easy to see that the market is still within sort of like a range-bound bracket. Okay, let me just call it bracket. It's in the middle of this weekly range, right? I think roughly about 50% of that weekly range, and it just came off these swing lows at 105. Okay, so at 105 even, that's where the market came off. So we might see a bit of sideways consolidation. I'd like to see a breakout to the upside, right? I'd certainly love to see that. And if we do get it, we'd have to get somewhat of a push, moving away from 108.50, move away 108.50, and come back into 108.50 and some sort of rejection candle, because this does look like a really solid area over here, and a continuation move to the upside. Okay, so in this one it's still a waiting game on the USDJPY, and therefore I will remain still neutral on the USDJPY for now. Okay, on the USD CHF, we've been expecting a breakout to the upside. You see the market came off these nice solid clean lows at 9,700. Okay, so at 9,700. Okay, right guys, I just lost my screen. Just give me a moment. Okay. Okay, boom, there we go. Hopefully you guys can see again. All right, so we're looking at USD/CHF on the 4-hour time frame. We'd like to see a break above that one even level, right? So that's basically parity. That's €1 Swiss franc rather is equal to $1 US. Very nice clean highs at that level as well, right? And the trend seems to be heading upwards, right? So there's a lot of potential on the upside for a target at 102 even, right? So if we do get that play, there is a potential for about 100 to 180 to 200 pips on this particular move. And I mean, you're probably going to be risking 50 to 40 pips on this particular currency. So still really good risk reward ratio, about 1:4. So we'll just have to wait and see how the market will behave around this one even level. Okay, but I'm certainly hoping for a breakout to the upside. Okay, and last certainly but not least, the GBP/CHF. I think we did take a look at this, and we're just looking at it from the standpoint of what usually happens, obviously, in the markets when you reach the previous week's high or the previous week's low, right? So we're just highlighting the significance of that. Right? With this hit at 65.50 and the market pulled away, this is about 50 to 60 pip pullback that we usually get, and just waiting on the reset or the retest rather, right above that level there as an entry confirmation signal. Okay, but if we go into a bigger picture, like let me remove that because we are done with that example. Right, now we can see on the 4-hour time frame, we get this tag at 65.50, which does look good, right? It's not too shabby. I'd like to see the market come down to at least 65 even though for me to sort of like have a bit more interest in it. So if you're looking at this swing low here, right, the swing low through to that swing high, that 50 to 62% range comes in at 65.50. So 65.50, that's probably where we'd like to see the market pull back in, right, and then continue the extension of the upper levels on the upside. Okay, so that would be obviously the most convenient play that we'd like to see. We do have a rejection at this daily 200 EMA. Okay. However, aside from that, there's not really that much of a structural rejection that I am seeing on the GBP cap. Okay, so we'll just have to wait and see. Okay. Highlight those levels. We'll look at the markets back again when obviously when the market reaches that particular zone, 65.50, 6500 rather. We just highlight there. And if everything comes together at that price point, we are definitely looking at a continuation of this move. Even if it's just an extension to 68.50, which is probably about 300 to 400 pips at most. Okay, because I am still a firm believer. Let me just move to my weekly. Okay, I am still a firm believer in the pound technical leading me into a bearish tone. Right now, we have to consider the Brexit deal. Okay, we have to consider Brexit. Obviously, I can't really share much about that at this particular point. But if we are looking at it from a technical standpoint, I mean, we are still in a bearish sort of tone. Okay, we are still looking to head downwards. Right? If anything should change because of the Brexit deal, obviously we'll be able to deal with it when the time actually comes. But like I said, if you don't like volatility, if you hate volatility, just stay out the market to at least the end of October, because this is going to be a few more things that will pop up regarding the Brexit deal for this month. So rather stay safe. There's a lot of other markets you can actually trade at this for this time period, okay, rather than just getting into markets that you are not really comfortable with, sort of like the volatility of it. Okay. Do you guys have any questions? Okay, before you guys ask, the session is being recorded, so I will upload it onto the YouTube channel. And that was just us taking a look at markets like we usually do on a Monday. Right, tomorrow we're going to be having our advanced session. Right, advanced session is just going to have us looking more at, okay, right, so the advanced session is just going to have us looking more at how to exit a position and how to properly manage risk. Right? So that's going to be what we're covering mainly tomorrow. Okay? And then on Wednesday, obviously, that's just beginners. So it's just going to be us breaking down more of the fundamental concepts. And then on Thursday, there's some research that I need to get done with you guys on Thursday regarding how to properly structure your fundamental analysis game plan. Because you should be able to tie in what's going on a fundamental scale and what's going on at your with your technical, because that is also important. So I will be calling this end of the session. So if you guys don't have any questions, I'm not seeing any questions, right? No hands being raised. So if there are no questions for today, I will end off the session here. I'll post the link in the Telegram channel. Remember, guys, we are off the WhatsApp group, right? We are in just the Telegram channel right now because it's pointless to have two groups. And all the content will be posted on the Telegram channel. So if you're not there yet, just go through to the Telegram channel. Right. Hope you guys enjoy the rest of your evening. Cheers. See you tomorrow.